now due for our interview. As I had informed you earlier, we'll be having an interview on the credit access situation in the country, and more specifically narrowing it down to fintech companies. And we are now joined on Zoom by Annastella Mumbi, who is the acting general manager of Tala. Anne, welcome to the program.
Thank you so much. Pleasure to be here.
Good to have you. Now,
thank you.
What is the status of the industry since the operationalization of digital credit providers regulation by the government?
Yeah, from where we sit, this is one of the most progressive regulations that exist, not just in Kenya, but globally, with regards to streamlining the digital lending industry and also setting a standard of how the industry should operate. So from the standpoint of Tala, we are one of the 32 lenders who are currently licensed with, I believe at this point, over 300 plus applications sitting within the central bank. Part of the benefits that we have started to see is that customers are becoming more confident around the industry and around their safety while accessing credit. And more generally for us as a business, I think it has acted as sort of a stamp of approval from the regulator on our operations and on our intentions to continuously advance consumer safety, even as we're increasing access to credit through digital credit provision.
And has these regulations affected the demand for credit, and especially on the digital platform? And if yes, in what ways? Yeah,
so, it's a bit of an interesting one where, of course, there's always a question of increased access to credit more generally based on the tough market situation that we're currently in, with rising cost of goods and rising inflation. However, from just a regulation standpoint, nothing has shifted fundamentally. Since other unlicensed lenders are still in operation within this market, so I wouldn't say that we've seen more increased traffic versus our operation coming out of COVID and last year. However, definitely the market is going back to par conditions, of course, coming out of the 2-year COVID slump.
And due to the current economic situation that most countries are experiencing, what has been some of the borrowing trends that you have witnessed, and especially being one of the leading fintechs in the country?
Yes, for sure. And, currently we are the largest private lender in this market. And part of what we've done year on year is launch something we call the Tala Money Match Report that we launch in March, just looking at consumer behavior and how consumer needs are evolving. So coming out of the one that we launched in 2023, just in March a few months ago, we noticed that Kenyans are actually tightening their belts in the bid to manage the rising cost of living. So what I mean by that is we're just seeing a lot more people cutting spending on what you'd consider non-essential or luxury items, while actively increasing the savings that they're putting aside. In some instances, we did see customers actually borrowing to save, which is quite an interesting trend. The other thing that I would like to call out is if you compare 2022 and 2023, we saw about an 8% drop in customers who claimed that they would anticipate borrowing more over the next 6 months, which is quite an interesting behavior, because it seems customers are becoming more mindful with the amount of credit that they're taking up and ensuring that they're not over indebted, even as, of course, there's a huge impact to the value of their income, taking the rising cost of goods and services currently. More generally, looking at Tala, I would say we're yet to see any impact on our books. However, we are watching this very closely as inflation continues to increase.
And one of the issues facing fintech companies in the country, Tala included, is the issue of defaulting of loans. What are some of the remedies have you had to do or to switch with the current economic turndown that has been experienced not only in Kenya, in the region, and globally?
Yes, for sure. And I think one of the benefits of us being a fintech organization continues to be that we leverage machine learning models to determine credit risk. So we are continuously underwriting customers even after they become long-standing customers of ours. So far, I'd say of the work that we've been doing on our machine learning model as a data science company and our ability to determine credit worthiness, we're yet to see any huge increase or impact on default rates. However, that said, we're very, very aware that customers are going through a tough time. As a business, one of the things that we have instituted to always ensure that our customers are well set up is enable them to be able to call us and renegotiate the terms of their repayment. So whether this means that they're renegotiating how fast they can be able to pay the loan or renegotiating their due dates, then allowing for those different inputs to just ensure we're supporting customers even as they're readjusting to the new way of living.
Interesting conversation. Thank you so much, Annastella Mumbi, who is the acting general manager at Tala, one of the leading fintech companies in the country, shedding some light on the credit access and especially when it comes to money borrowing through your phone. Thank you so much. Unfortunately, we are out of time. An interesting conversation, though.
Yes, thank you so much. I appreciate it.